going on, guys? Here we are on another episode of Real Estate and Sneakers, two of my favorite things that I love to talk about. Today, we are going to be talking about the Jordan 4 Pinnacle, the snakeskins. So, as you can see, these sneakers have been through it. I wear these a lot. This was actually one of the first sneakers that Jordan brand made. This was probably 10 years ago when they started to compete with the luxury brands. So this sneaker, when it dropped, retail for $400, which at the time was a big deal and a lot of money. They actually dropped these in 4 colors. Snakeskins, the black ones with the pony hair, the navy blue ones with the rose gold, and the wheat. So out of the 4 pairs, I have 3 out of the 4. This one, like I said, is a really dope shoe, really dope materials that they used on these. And if you could find a pair online, I would definitely suggest that you grab them. I think they're probably retailing now. Well, they're not retailing anymore. It's on the second market, secondhand market. I think probably for anywhere between $800 and $1,000 if you get lucky. But definitely I would say grab a pair. Mortgages and the interest rates we're not going to talk about too much because of my guest. He can tell you more about what's going on in the real estate market as far as the mortgages are concerned. But today we are sitting down with my guy who is a father, a husband, mortgage guy, my guy, David Mizrahi. What's going on, bro?
Nice to be here. Thank you so much for having me.
Thank you, man. This has been long overdue. Right?
I'm happy we made it happen.
Thank you, man. We appreciate it. Let's talk about the interest rates for a second. We're gonna jump all over the place, but what are the rates right now today?
Low to mid sixes, depending on a few things: down payment, credit score, income, things like that. Which program you're going with? So right now they're pretty aggressive. Right now, low to mid sixes, which is great. We're on a downward trend, which is awesome.
Nice.
It's going down, but I always say mortgage rates is like losing weight. It takes you forever to lose it. And then one day you go on vacation and then you come back, you gained it all back. So that is interest rates for you in a nutshell. But yeah, right now we're on a downward trend and God willing, we'll keep going that way.
Nice. Who are you in your own words? So I can sit here and praise you all day because you're one of my guys and really, really cool guy that can pull off a lot of things. So the 4s, the snakeskins, I could definitely see you pulling those off with a nice blazer with some jeans. I could definitely see you doing that.
Yeah, for sure. I mean, who am I? I'm a guy that really helps in regards to mortgages, really helping people that usually are the person that falls short of thinking they're able to buy a home. I'm a guy that really helps educate people because we all understand there was never a class in any type of, schooling that you've ever had that teaches you how to buy a house or a mortgage. And that's something that I really enjoy doing. It's one of my give backs. I do them all the time. I'm doing one actually tonight.
Tonight, right?
And because most people don't think they could buy a home, they don't know how to buy a home. And I always say most people, they think they're scared to buy a home, but they're not. They're actually petrified. So if you could actually show them what they need to prepare themselves, it'll make you a little bit less petrified because you're still going to be a little bit petrified and excited and happy and all the good things at the same time. But at least you'll be prepared, which is really important, and know the numbers.
I think it's really great, like you said, to educate people because I have a lot of my friends and some of my clients that never thought that they could buy a home. You'll be in a situation where you're helping somebody rent a place and you say to them, you know what, the amount of money with your first month's rent, security, and the broker's fee, the amount of money that you're about to put down, you can take that same amount of money, use it as a down payment on a home, and as long as you can afford the payment, you really need to go that route instead of renting another place.
I couldn't agree more. People always ask me, when's the right time to buy a home? And I always say the same answer. Whenever you qualify for a mortgage and could afford the mortgage payment.
Thank you.
It's very simple because if you think about it, numbers are numbers. They don't lie. So the longer you wait, the more expensive real estate generally gets, right? A home yesterday was cheaper than today. A home last year was cheaper, 2 years, 5, 10, 15, 20, whatever you go, it was cheaper than it was the year before.
Agreed.
So at the end of the day, the longer you wait, unfortunately, the more expensive it gets. And, most people are waiting for 2 things, really. Number one is interest rates to go down. And number 2, to save up more money. But if you think about it,
Oh, three, market to crash too, right?
Market to crash. That's been,
I hear that so much.
oh my God. Yeah. Those, right now the economy is doing well. Banks are flush. Everyone's thinking 2008. That was a once in a lifetime, once in a generation, once in a, it's not happening. In my opinion, you
My opinion too.
anything can happen, but I don't think so. But yeah, so waiting for market crash. I hear you. All those people that waited, unfortunately, really lost out on. Then you have the persons waiting for interest rates, and I'm not a big fan of that for really a couple of reasons. Number one, if you're waiting for the interest rates to go down, so are so many.
So many other people that don't.
Totally. So if you think about it, there's so many more buyers, which creates so many more offers, and now money's cheaper, so they could put in higher offers, and now you have bidding wars, which now brings up prices of homes. A lower interest rate, higher price equals a higher mortgage payment. So even though you think you're benefiting, but a lower rate, you're really not. In my opinion, is purchase the house with a higher rate. Over time, the interest rates will fall, right? Interest rates go up and down. They're not like real estate. Real estate generally goes this way. Interest rates is like a heartbeat, up and down. And eventually will go down. And eventually at that time, you'll have more equity in your home. And then you could get a lower payment because you get rid of your PMI or get a lower PMI. And then the interest rate goes down, you get a lower payment. But also at the same time, every time you make a mortgage payment, you pay your mortgage down. So if you're paying your mortgage down, you owe less money, your payments go down even further. So if you could afford it today, you should be able to afford it a lot more in the future. And then the second one is just, I'm saving up more money. If you have enough, here's the thing. You already have enough to purchase the home, but the home is going up more and more every single year. So if you think about it, the average home goes up 3 to 5% per year. So if a home that's 600 goes up to 620 next year, even if you save $40,000 that year extra, now you spend $20,000 on the home. So you really netted $20,000.
$20,000 instead of the 40.
And then if you think about it, you have a higher mortgage payment. So now your payments over 30 years, you actually lost more money. You lost money waiting that time and saving more money, even though in theory it sounds correct. But unfortunately, because of the way real estate goes, it's going to, unfortunately, probably hurt you in the long run.
Nice. Thank you for letting the folks know that. Family background and your upbringing.
So family background. So me and my sister, boy and girl, regular.
Oh, two. Okay.
That's it. Nice and simple.
Nice and simple.
Nice and easy. Boy and a girl. My parents got lucky. But, grew up in Brooklyn. I'm a Brooklyn boy. I went to a private school. Then went to Madison High School, which was a public school.
No, I went to Madison for mediation. I was fighting. Yeah. We'll talk about that later, folks.
Different day.
Where'd you grow up in Brooklyn?
So I grew up in Flatbush area, Midwood area.
Oh, okay. Yeah. I used to live I lived in Flatbush. I used to live on Forster Avenue, East 24th.
Okay, I know it very well.
I went to PS 152.
I know exactly what it is. I'm a Kelly Park boy, so I was always there, and then Marine Park. So always those places. Those are my ball places.
Nice.
Yeah.
What got you into mortgages, into the mortgage business?
A mistake. I always say I didn't choose the industry. The industry chose me.
It was you, right?
Yeah, I kind of, when I was a senior in high school, I had very little classes because I did them a lot I did a bunch of them when I was in my junior, sophomore year. Mm-hmm. And I needed some money to go out on the weekend, and I took a job as a secretary in a mortgage company.
Okay.
And I was 17 years old, and then it just so happened that a lot of the guys in the company never answered their phone, so they would always call the secretary to complain, right, the clients. And I was doing really well with keeping them on board for the loan officers.
Right.
And then, long story short, the head of sales, Alex Rudsky, came over to me and said, "I got 2 things to tell you." And I said, "Yeah." And I had my headset on. I'll never forget the day. And he goes, "Number 1, you're fired." And I said, "What?" I said, and he told me, "Actually, I have 2 things to tell you, and don't speak until you hear the second thing."
Oh, wow. Okay.
Yeah. And I said, "What are you talking about? I just got my car. I just came, whatever." He said, "Shush. I told you, kid. Wait." I said, "Okay, you're rehired as a loan officer in the back, but no salary, just a draw." So obviously I took it. And my first year, I didn't do that well. My second year, I made in the 6 figures, which was pretty cool. I was 18 years old. I lived in the city.
God bless.
I moved to the city. I had a pretty cool life, big up and down. But yeah, I experienced a lot. And thank God, at the age of 42, I'm able to understand the concept of money now, which is great because I had it and I lost it. And thank God my children helped me get it back.
Now I'm 51. I still don't understand the concept.
Yeah.
We just, we make it and it's in and out, in and out.
It means nothing. But at the end of the day, when you have 4 kids, it's the only time it means anything because that's it. It's for them.
Yeah, that's true.
Yeah.
You not doing much in your first year. I think for a lot of people that are in a lot of different businesses, I mean, for myself as well, my first year in the business, I sold one house.
Right.
I did absolutely nothing.
Yeah.
So I think that's kind of the norm. I mean, some people get lucky in their first year, they make a
I've seen it.
ton of money.
I've seen it.
Yeah.
I've watched it, but I always tell everyone, especially in sales, stay the course.
Right.
At the end of the day, whatever you did today is not going to pay off today. It's going to pay off in 6 months, a year, 2 years. But once that cycle starts,
It just keeps rolling.
yeah, as long as you're a good person, you do the right thing. Yeah, why not?
Amen. Agreed. What would you say would some of your early challenges and mentors?
Challenges was being young. I was 7, 8. Who wants to deal with
17, 18 from the yeah.
That was my biggest thing. Actually, the funny thing is, after every one of my clients closed, I used to tell them, how old I am? And I used to say, I'm 18, I'm 19, now I'm 42. So it's like, I don't even ask them anymore. Yeah. They're younger than me. But I used to say that because I wanted them to understand that the age was, and I wanted to prove something was
It meant nothing.
And I was try to always be the smartest one in the room, know everything, understand the craft. I mean, I learned from 2 people. Mentors, I had a guy named, I won't say the full name. His name is Alex.
Oh.
And
Shout out to Alex, maybe. I don't know.
yeah, he was one of the best salesmen you'll ever find.
Okay.
He's the best. But he'll take your shirt and sell it back to you.
Okay. Maybe we don't not so much shout to Alex.
Yeah. But
that's salesman.
But he's the best salesman.
Sure.
Then you have a guy named like Gus. Gus Kafalis guy would be the most genuine guy in the world, sometimes too genuine.
Oh, really?
And don't forget that you go to work to make a living. You don't have to make a lot of money. You don't have to be like the other person. You could just basically make a healthy living and make a career and make a name and do it the right way.
Right.
Where people feel comfortable with referring people to you.
Good.
And then there was a guy named David, who was the owner of Guaranteed, David Wind, who was him, who I remember I was doing a ton of business. And he came over. I remember I was in his car. He was taking me home after a dinner meeting. And he tells me, he goes, you know why you're not a winner in my eyes? And I said, I'm like, the number one.
It intrigues me. Yeah, right.
And he goes, no, you're actually kind of closer to a loser than a winner.
Really?
And I said, well, explain.
And you were doing a ton of business?
Ton. He goes, tell me the last closing. Told him the name, the loan amount, everything. The last one before. How many deals you have in your pipeline? Told him. How many did it? I knew every single answer. He goes, that's why you're a loser. He goes, you know the things that don't mean anything. You don't have time to do the bigger things because you're doing so many little things. You'll never be the winner if you're always doing the little things.
Wow.
And I remember he took me, I was on a high with him at dinner and I went down quickly. But I always say, fail, acronym. Everyone thinks that as a negative. I look at it as a positive. It's first attempt in learning. I took that fail and I learned from it. And I hired an assistant. And now I have 2.5, and they deal with the little things, which in my industry, the little things are big things. Thank God I'm blessed with 2.5 unbelievable people, 3 people that really are my right hand, my left hand, and we'll call it my second left hand.
Okay.
And they could control everything inside where I could be outside and I could be with you. I could be with my clients. If people have problems, like we had a deal that was probably one of the toughest deals.
We're going to talk about that. Definitely one of my toughest deals this year.
But it took a lot of time, but I always had the time to do it, and that's important. But I guess we're talking about it later. We'll leave it there on that.
Right. What do you love most about the mortgage world?
I'm able to make people's dreams come true. Back to that client where I don't think any 2 people in the industry would be able to close it. Honestly, I'll be real honest, because the time that we needed to do it and the miracles that needed to happen, we wouldn't have the time for the miracles and for me to be able to do what I do if it wasn't for you.
Thank you.
I don't think anyone else, thank you, would be able to get the time that we needed and to make the seller feel comfortable with giving us the time.
I think you and I on that deal, we might have to rename ourselves like Michael Jackson and Paul McCartney. I don't know if that's a good name, but Jordan Pippen.
He's Jordan. I'll be Pippen.
There you go.
But at the end,
Magic and Bird.
Magic and Bird. Okay, that's actually
yeah. There you go.
Plays the part. I guess I'm Bird.
Right.
But yeah, I love being able to be in that position to, the easy ones are great, fine,
of course,
let them go
every single time, right?
No problem. But the ones that really that no one could figure out, you figure them out, and family gets the all the awards from it and all the and all the accolades and owning a home and all the great stuff, and it's because of you. There's no better feeling, in my opinion.
No, agreed. Would you say that the business has gotten easier or harder since you started?
Well, when I started, all you needed was a pulse and you got a mortgage.
Oh,
So
yeah. Okay.
that was in '01.
Right.
But I would say is that it got more complicated in a way where the entry wasn't as easy, where you need to get licensed. They check your credit, they look at your financials, they make sure you're someone that could actually help someone consult someone on their financials.
Right.
But also at the same time, now you're looking at tax returns, W-2. I mean, believe it or not, I know one of the biggest producers in this industry who does a ton of business, and she has no idea how to read a tax return,
Really?
how to look at a W-2, how to look at a pay stub. She's never reviewed one, never looked at one, doesn't want to understand it. I know people that work that don't even want it, and I think that's embarrassing. You're sitting in
Well, I was going to
front.
say that. I kind of look at it, and I'll let you finish. I think maybe as a disservice in a sense, because if you're sitting down with someone, whether you handle that part of it as far as the paperwork is concerned, you should still know how to read it and
Yeah.
how to be able to explain whatever
break it
needs to,
down.
and break it down to the client that's sitting in front of you.
Yeah, not only that, because you tell someone, okay, everything looks good, then they start looking at homes. Now they're spending time. Then they go into contract. Now they're spending money. Now they go into contract. Now the seller, who 97% of the time is selling their home to get the money to buy another home. And
Right.
now you're gonna, if you have a problem on your mortgage, they have a problem on their mortgage.
Domino effect, full.
It's a big domino effect. So at the end of the day, it's important to really understand what you're giving your client, but also for your client to understand, is it an FHA deal? Is it a Fannie Mae, Freddie? Is it going non-QM with no tax returns? What's the rate? More important, what is the payment?
Right.
Because everyone talks about pre-approvals. I don't care about pre-approvals because
To me, it's not worth the paper it's written on.
it really isn't. But at the same time, I work with the anesthesiologists of New Jersey. They all make $500,000, $600,000, $700,000, $800,000 a year. They're all pre-approved for a $2.5 million home.
Right.
But when I tell them, when they ask me, what am I pre-approved for? And I tell them $2.5 million, and they say, really? And I said, yeah, but here's the payment. Majority of them, if not almost literally all of them, say, I'm not interested in that payment.
Right.
They're pre-approved for it, but the comfortability on fact,
It's two different things.
two different things. So I reverse engineer it where I figure out what the payment is for them. This is comfortable for you. Now we get it. Your taxes are $12,000 a year minus $1,000. Your insurance is $2,000 a year minus $166. Okay, now we're down to here. That's your payment. You could afford a $1.2 million loan amount. You're putting down 20%, 1.5 in that hypothetical. And now they understand, go form over the home at 1.5, because before that, someone will just give them a pre-approved for $2 million.
$2 million.
Now we fall in love with a home at $2 million, and now they don't make a financial decision, they make an emotional decision, which is usually the worst thing.
Yeah, I mean, I've had situations where I've talked to clients who got pre-approved, Jack, you said, or someone gave them a pre-approval. We start to look at homes in that price range, and they see something that they like. I talked to them about the payment, thinking that they've already done that with the mortgage person. They're like, no, we didn't speak about that, and I'm not okay with this payment. I'm like, then why did you choose this individual anyway? Well, I found him online. I thought that, I'm like, this is insane. I'm doing more with you, more educating with you on the mortgage aspect, and I'm not even a lender.
Correct. It happens more than you think. It's actually pretty sad in a way, but I always say that actually, in a way, it shows my value.
Right.
And now now they understand that I'm actually not just there for myself. I'm there for them. I'm breaking down. I understand my craft. I know how to articulate it. I know how to break it down.
Yes.
But more importantly, I know how to find that comfort level for somebody so that they don't make a financial mistake, which is important, because I really do believe that everyone should buy a home. It's just a matter of finding the right home at the right price. And that's it. After that,
everything else is...
That's right. I mean, having a roof over your head there's nothing more stable. Every year your landlord raises your rent.
Right.
Or let's just say, oh, my child needs an apartment. Your rent is your lease is up in 3 months. You're out. Now all of a sudden you're
back to square one again.
It's a tough situation.
I agree.
So yeah,
I agree. What would you say some of the challenges that the loan officers are facing today?
There aren't so the biggest challenge I would say is during COVID years especially, there were so many deals going on with so many different people, so many agents.
Right.
Now the business condensed. So a lot of the part-time agents aren't doing as well, and a lot of the loan officers that had relationships with them, unfortunately, are not getting any business from them.
Okay.
So they're scrambling, and now it's kind of bottlenecking the business over to top producers that actually were doing it the right way for a
Right.
longer period of time. So yes, there's more competition, but at the end of the day, I don't shy away from it. I kind of like it because it
You
separates
embrace it.
me.
Yes.
Yeah, it's for sure. But more importantly, um, it's going in the right direction because a lot of these top producers say, majority of them, I would say, really are in the business for the right way business. They understand the business better. They really could help the client better. They help the relationship better because
Agree.
I have clients that literally, I have agents that I work with yesterday. She sends all her business to a different individual,
Right.
and we know them very well. But she wants to buy a home with her mother, and her sister wants to buy a home, and she only wants to work with me.
You guys hear that?
But it's, I have, it's all the time. So it's just like they feel bad. They know them for a while, this and that, but now they start working with me and they see how it
It's
is.
a level of comfort, and also you being able to articulate things the way that you do, you being able to explain things the way that you do, you being able to educate them the way that you do.
Yeah.
It makes a big difference.
It really does. So for me, I always say you stay the course, you do it for the right reasons. And eventually, even if you know someone for a long time and you don't even work with them, um, if you're there at the right time, you know what? It works. And then if you have to prove yourself, because in sales, it really is, you're as good as your last deal. And it's a horrible saying,
It's true.
but it's the truth.
It's true.
You know, it really is.
It's true.
And if you don't treat someone the right way or treat the client the right way or whatever it is, they move on. And there's, you know, there's competition. So there's 1,000 other people in their address, in their phone book, in their contacts that they can call within 1 second and you're replaced.
Right.
That's it.
And they do the
So
business.
that's how it is. And there's nothing wrong with that because business is business, as they say.
Right.
It's harsh, but it's the truth.
It's true.
Nothing wrong with it.
Yeah. Misconceptions that our clients have about pre-approvals.
They think it's the world. I always did. So like I always say, just put it this way. What does every person in this country have in common that got denied for a mortgage? They all received a pre-approval.
Yes, because I didn't even know how to answer that question. Wow.
All received a pre-approval. So at the end of the day, if a pre-approval meant something, then there would be no such thing as denial.
Denials, right?
Ever. You know? So the problem is I mean, like tomorrow morning at in the afternoon, I'm closing a file that I picked up 2 weeks ago that I had to scramble and do a million things to get it done.
2 weeks.
Yeah, I'm closing in 2 weeks for him.
Nice.
Yeah, I'm very happy for him. Yeah, he's closing tomorrow, and the bank totally dropped the ball. Literally flat out denied the loan, no ideas, no ways to get it done. He called me up. I had to switch it to a no tax. He's self-employed, broke it down, figured a couple of things. I even got his credit scores up 20 points. Yeah, that was cool. And I got him into another bracket, which saved him a couple more bucks. It was pretty quick. Yeah, he just paid down a credit card. But things like that. Sometimes, you know, I would say a lot of people think that credit scores mean something. And right now, Fannie Conventional just came out with credit scores are going to be taken away.
Taken away. I read something about that.
Yeah.
Yeah.
So
Is that going to hurt it, help or hurt?
So the answer to that is just knowing what's probably going to happen, and this is just my opinion, is that they're saying that they're taking credit scores away. But as an investor, let's just say Chase, for argument's sake, they're going to say that's your guidelines, but I don't want to deal with a 550 credit score. I will, but the guidelines on it, my pricing on it, they would have to pay 4 points.
It's a different pricing point.
Crazy price point. And they'll put it so expensive that most probably 99% will take it. Right. So that's probably will happen. Now, the person that has a 550 credit score, putting down 20, 25, 30%, that actually will have something, a lower LLPA, loan level pricing adjustment, lower risk to the bank, lower rates, things like that. So if you're putting down more with the lower credit score, the pricing adjustments are lower. So that person won't get affected as badly, and that person will benefit. So there will be someone that will benefit. A lot of people won't. But, you know, I have clients that call me all the time, but I have a 570 credit score. I want to buy a house, and I got money. You know, things happen in the past.
Things happen. Right.
It happens. Like I have a client right now, bankruptcy, foreclosure, everything under the sun, and I'm giving him a mortgage.
Really?
Yeah.
Wow.
But he explained why. He had a bad divorce, or You know, he lost the house.
Right.
He lost a short sale. It was bad.
Oh, got
It
it.
was bad.
Got it.
But when you paint the picture the right way for an
Right, right,
underwriter,
right.
they will understand grass is now greener. And now that he's more financial stable.
Yeah, I think as long as you're making money, you're paying your bills, or you get into a situation, but it's not consistent. Because I know some people who make six figures every year but don't pay their bills.
Yeah.
There's a lot of those out there, folks.
A lot. I know people in the 7 figures that don't pay their
Seven
bills.
figures.
Yeah. I know one in the 8 figures that doesn't pay his Porsche until they give him a repo.
Really?
Yeah.
My God.
4 months, like, and then pay. True story.
That's insane.
Yeah. And worth in the 9 figures.
Wow.
Yeah.
There was a hard deal that you helped me with. From your perspective, and we'll talk about it for a little bit. What do you think made that deal so challenging? I mean, we had a number of factors, but
Which factor? There was 7.
7.
I mean, we had a credit score problem, funds problem, debt to income ratio problem 3 times because they went with a more expensive house. Then we found out the taxes were more.
Right.
Then they needed, and then their insurance was more. And then they had an extra bill that popped up. And we figured it out. And their credit scores, I think we started with like a 540.
They were under 600, I remember.
And then we got it to like a 621. Like, God, I would say is that there was so many like if we weren't involved, I would tell you the story didn't make sense. It was a lie. You made it up. You could put a movie about it.
Right.
But there was 3 times in the file where I told them, there's nothing, I did everything and there's nothing I can do. You need a cosign. You have to go conventional FHA. You can't do the VA loan anymore. They couldn't figure out, and they say, let me pray on it. Remember?
I remember every single time you called me.
And they prayed on it, and within a business day or 2, they got a letter in the mail. One time their Social Security went up, and it just covered everything,
Right.
just enough. And then the other problem happened. I forgot what it was, but then we couldn't do anything about it. I had to pay off the auto loan. They couldn't get it done. And then they prayed on it, and then his VA benefits
It went up, right?
like crazy. And that was where I said God was in this file.
All
The credit score you needed was a 620, 621. Debt to income ratio was good, not good, good, not good, not good, good, good. Got the money that they needed because of the VA benefits. Were they the 9/11 victims also?
They were 9/11 victims.
That's what it was. They got the 9/11 funds out of nowhere, and then they got the monthly benefits on it. Wow, I'm reliving it. It's like PTSD. I had sleepless nights, so my hands are sweating thinking about that file. But yes, it took everything in the book to get that one closed, and they are an awesome family.
They are.
And I was so happy for them.
They are.
They cried.
No, that was a great it was a great deal, great experience.
But you know what the coolest part was? I'm sorry to cut you off.
Sure.
Was all the problems that we had, Femi and myself always updated the client and was involved in it. And
Every step of the way.
we were never on the defense. We were always on the offense. And the listing agent we spoke with, the seller we spoke with, and of course, we had to speak with them literally 7 times. We would speak with them almost every morning at 8 in the morning, 7:30 in the morning. And we would speak with them literally at 8:30 and 9 o'clock at night, almost majority nights. So yeah, that took a...
It took a miracle. It took a lot.
And a lot of professionalism.
Yeah, which a lot of people don't know, when you get those types of deals, because initially when they were referred to me, they were looking in the 500 to 525 price range. And in Long Island, you guys all know, even for a house that needs work, you're going to find very few and in between.
Very few.
So with everything that we had to do behind the scenes with David educating them and, certain things kind of lining up, which it normally doesn't, they ended up closing on a house for $670,000.
Yeah. With
we
taxes at like 13, 14,000.
Yeah.
Yeah, but they were going to get all the VA benefits, and the taxes were going to...
It was going to reduce the taxes
dramatically. But yeah, that's crazy.
What about that deal? What did it teach you? about bias. Of course, we know all buyers are not the same, and all
No,
buyers are not gonna stay the course. But
but if
with that particular deal,
if with all the problems we had, the way we handled it, if as long as you're upfront with them, they're with you. They're
right,
not against you.
right,
Because if you keep it away from them and you try to figure it out yourself and then you can't, then they find out and they call you 2, 3 times, you don't answer your text, and then you call them up out of nowhere with bad news. At the end of the day, they're not going to feel comfortable and they're going to feel like you're against them.
right.
So the minute any type of obstacle arise, the first thing I did was call them and say, this is the issue. Here's my plan of attack. And I need your help with which way you think is the better way. And then, of course, we got Femi involved on a lot of things, and Femi got me involved on a lot of things. And together, we nailed it. Honestly, we couldn't have done any better. I honestly, on my
I believe that. Yeah, you and me both.
I really believe that. I really don't believe they own a home if it wasn't for two of us.
Thank you, and thank you to you yourself. What do you think separates strong loan officers from the average ones? Because there are a lot of average ones out there.
Communication.
Mm,
That's
okay.
it. Listen, rates, everyone has the same rate, fees, they're all up and down by $500.
Give or take.
Yeah, that's not a reason to work with someone or not. I mean, mine are on the lower side, but like that's not a reason to work with me, like
Right.
it doesn't matter.
Right.
But really just communicating and just letting the client, because there's so many times where, perfect example, Cindy Martinez called me up a few weeks ago with a client that had a bad experience with a loan officer, want to put it on hold. She said, before you went with, this guy,
This person, right.
I have this guy here that knows everything. Let me just speak with him. She called me. I broke everything down. It was a Sunday right after my son's football game. On the way home, I broke everything down to her. And after I was done with the phone call, she said, let's start looking at homes.
Really?
Yep. I swear. That's why I said her name. Call BS on me.
Nice.
And unfortunately, we got in contract for a home. We were going into contract and the seller backed out last second after inspections and everything. We're back on the hunt. But the bottom line is she will find a home.
Right.
But before she spoke with me, she was letting it go. And the agent was losing, not only losing the transaction, but also, in my opinion,
The relationship, you're losing everything.
you're losing everything, and it's disservice for the client, because now this woman would have not buying a home in today's market. She was planning on buying in 12 to 18 months. The homes would be more expensive. She would be worse off, and she might be priced out at that time. She has a healthy income. Her income is $170 a year.
Oh, nice.
She is a successful woman. She's doing it by herself without her husband.
Nice.
But after breaking down the tax benefits, because she was harping on her biggest issue was she wanted to be under $5,000 a month. Obviously, I'm with you on that.
Right.
What was it for? It was one of those numbers. Let's say 5. And her mortgage payments were $5,400, and she was all about the $5,400. And I said, but at the end of the day, if you think about it, once all your your payments are probably in the mid-4s. She said, how do you think that? I said, because do you know what a Schedule A is on your tax returns when you have all these benefits? You're buying a house at this price. Well, if you have $40,000, $50,000 in tax benefits, you're probably going to get a, $10,000, $15,000 income, tax credit,
Right.
from it, even more possibly. I said, let's just say 12,000. That's $1,000 a month. If your payments are, let's just say 5,400, it's 4,400. Once you start the cycle.
Right.
She said, well, I didn't look at it that way. I said, yeah. I said, but at the end of the day, it's one of the biggest pieces to your puzzle. And I said, now you understand your equation. So now we could come up with an answer. So after I broke that down, she said, 100%, I agree with you. There's no reason to wait, because at the end of the day, I am probably not going to save enough money to achieve what I'm looking for. And she was expecting possibly the real estate market to go down. And like we said in the beginning, that's not in my opinion,
My opinion too.
not the best thing. But after, I didn't tell her no by now. What I said in the beginning is what I told her. And she made up her own decision. You're right. But now she had the facts. Now you have the equation. Now give me the answer.
I have, I like the way that you articulate and break that down. I have certain clients that live in the city and are looking to buy a home in Long Island.
Yeah.
And we'll deal with the situation where they'll go over the payments and, they feel like the numbers may be off by a couple of hundred. And I say to them, you living in the city, when you move to Long Island, right now you're paying city taxes. How much comes out of your check every month
6%.
for city taxes?
That's
I
exactly
said
what I would
that
say.
money now will go back into the pot into the pool, so that three, whatever it may be,
Right.
goes back into the paycheck. Now that can help you be able to afford a home in Long Island that you you thought that you were priced out. So
Yep.
I think the same way that you do, as far as how you explain things and how you educate people, always makes such a big difference. And you'll have people that will stick with you and want to do business with you due to the fact that you are knowledgeable about what you do, and you can explain things and you can, articulate it.
Yeah, listen, at the end of the day, people lie, numbers don't. So for someone, I think a client, they're not lying to themselves, but they're afraid. So if you give you the numbers now, at least you'll feel like, okay, this is manageable. And now I understand the process. So it's not so scary anymore, but it's still a little scary, but exciting and happy. And every emotion is in one when you're buying a home.
Agreed. Let's talk about your real estate journey for a second.
Yeah.
How old were you when you bought your first piece of property?
21.
Really?
Yeah.
God bless you. 21?
Yeah.
I see why you don't have any here.
Yeah. But
I don't have any here, but
I lost all those properties.
you did.
Every one of them.
Oh my God. I was gonna ask what the lessons were on your first deal.
So I was young and dumb. Like I said, I started making money when I was 18.
Okay.
But I was smart enough to invest in real estate, but I wasn't smart how I invested, and also in the areas that I invested in.
Right.
And because I used to go pick up my rent check, and the guy would be, 6'5" and telling me, get off your stoop. Yeah, or it'll be the last time I ever able to walk up a stoop again.
Right.
So that was the last time I went to go pick up that rent check. And then I hired a management company that said, I will never go pick up that rent check either.
Really?
Yeah. Yeah. So at the end of the day, it happened to a lot of our properties. And then I chose a couple of bad partners who we pooled our money and we went in. And me and one other partner, who's still my best friend, who owns one of the biggest real estate companies in New York now,
Yes.
we're the only two paying our share, and then no one else paid their share.
Really?
Yeah.
How many partners?
5.
Ooh.
Well, some were 4, some were 5.
Okay.
And then bottom line is, in 08, and then 08 came, everything went to doo-doo.
Every single one of us. Yeah.
Yeah.
We all went through it.
And I was only 23, 24, I was young. So I didn't know how to figure it out. And I would have handled it very differently these days. I would have kept everything.
Right.
I would have just bought everyone out and taken it on the chin, and would have had a couple of bad years and would have got
the wave and you would have got through it.
Yeah, because I'm very against what I did. But I just had no choice.
Hindsight is 2020. You didn't know.
Well, yeah. Also so young, I couldn't understand it.
Right.
But I was able to smarten up, because I went from, a cool guy living in the city with almost everything you ever wanted, with cool apartment, cool car, cool doormans, cool club scene, cool dinner scene.
Oh, you had the whole thing. You were.
Everything.
Wow. Okay.
Everything.
Nice.
Yeah, everything. Then I got married.
Okay.
But the funny thing is, on my anniversary, no joke, my wife thought she was marrying something totally different. On our honeymoon, we went away, and I was in St. Bart's, one of our favorite places.
Nice. I went there last year for my 50th.
And I found out that my company closed, and I went from running a company to back to figuring out where I'm going to
Starting it all
over.
Wow.
But yeah, so when I had my first child, I had to borrow money to pay for her.
Wow.
Yeah.
Ooh,
Yeah.
tough.
Yeah, no joke. And then, but yeah, that's why we say stay the course, because it's going to work out eventually, which it did. And that's why we say my children in the beginning, I said, were blessings, because I had nothing until I had my daughter, Renee. And then something lucky happened to me in business, and I got a huge relationship, and then I took it and did very well with it. And then every time I had a child, something good happened.
Oh, good.
Really good happened. Yeah, but I'm done with kids.
Oh, I was about to say, do you keep having them? Because my wife, 4, I don't know, where you were taking it.
My wife wanted more, and I said no at 3, but now I got my Emily, and she's perfect. I'm good.
Okay. Shout out to Emily.
I want to enjoy my kids. I love 4 kids is a lot, not going to lie, but I enjoy each and every one. I feel like if I have 6 kids, I can't enjoy any.
Okay. 4 is the right mix,
And
the right.
If I had 3, 4,
Yeah.
listen, to each their own.
To each his own.
Most people would say
I have 2.
I'm
And a dog.
crazy, and I'd say 4 is too many. I have friends that have 6. I think that my cousin just had a 6 yesterday. I think he's out of his mind.
Boy, good.
5 girls and a boy. God bless him. Oh, a lot of weddings. Yeah, a lot of weddings, but God bless him. It's a
Nice.
beautiful thing. Children are beautiful.
Nice. Let's talk about the elephant in the room. 50-year mortgage. God, they've been talking about that so much. I know it only happened not even 2 or 3 weeks ago.
Yeah.
What are your thoughts on the proposed 50-year mortgage?
I'm a fan and not a fan, depending on the person.
Right.
The good thing about it is the entry point is lower for someone on a mortgage payment.
Right.
That's the pro, right? The con is you're going to pay interest for an extra 20 years, which is going to equate to 100,000, 200,000 more in mortgage payments in yours. Now, I would look at it as like a credit card. You have a minimum payment, which is your 50-year term. Then I would also give you something called the amortization schedule. What I personally would say, here's your 50-year payment, obviously. Here's a 40-year term payment. Amortization schedule shows you what your payment is, what you need to make extra payments every month to pay it off.
To pay it off in quicker. Right.
Yep. So then I would give you a 40-year term and a 30-year term. And now you would understand those numbers. So for me, I would just say, here's your term, here's your payment. You have, let's say your expensive time of you have your kids, you're this, you're that, you want the shorter payment. Great, nothing wrong with that. Kick the can down the road. Eventually your kids will get older, you have less expenses, and you'll be able to, manage everything a little easier, in my opinion, hopefully. And so that's great, because if you have a family vacation, a lot of expenses, you pay the minimum payment. But then after, but if you have a great month in work or you get a bonus, pay extra,
Right.
Pay it down, because no one wants to pay a mortgage for half a century,
Of course.
So am I a fan of it? For certain people, yeah, because I would rather you pay your own mortgage than someone else's mortgage and rent.
Agreed.
Right?
Agreed.
And now you have stability, you have ownership, you have tax benefits. Every good thing in this, for finances are there, and your children have a home base, which is the most important. And then at that point, you could figure it out, because, I always say, like I said before, eventually your mortgage payments will go down. So you will be able to afford it a lot easier in the future. But also at the same time, God willing, each year your income should go up a little bit, or God willing, a lot of it each year.
Every year, right.
And while your payments, your income, God willing, goes up a little bit at a time, or a lot of it at a time, and God willing, eventually those interest rates will drop. You'll refinance, get rid of your PMI, get the lower interest rate, you owe less on the house, your payments will drop. And now with your income going up and your payments dropping, it should be a little bit more affordable for you. It's never going to be the simplest thing in the world. God willing, it will be, and eventually it'll be free. But for the time being, it'll just get easier and easier.
Agreed. You think younger buyers, you think they'll take it, or?
I think people will, and I think they should, because you know what, you could worry about the interest later, because you could take the 50-year, you could invest into that home. That home is going to go up so much in value anyway, most probably, right?
Which is what it's been doing for the last how many years now?
Ever that we've been on this earth. There's only been, 4 times in the history where in a year the real estate properties went down.
But it went down, right?
And if you look at even in 08, right? 08, the properties, say they start here in 07. 08, they went here. 09, they went here. 10, they went here. 11, they went here. 12, they went here. 13, they went here. 14, now they're higher than where they started.
Right.
15, 16, 17, we're in 25 now. They're here. I don't know if you see my finger anymore on the screen. But it is worth a ton more. And the good thing is if you think about it, you're born in 08, we're in 25 now. That's 17 years ago. You're over halfway there paying off your mortgage. You have 13 more years left on it. And most probably you took advantage in 21 when the interest rates were 2-3%.
Exactly.
And now you're paying nothing. And there's no point to paying it off sooner, because you invest in a CD, you're getting 4, 5, 6%. And if you pay off your mortgage, you're only saving 2%. Why would you pay off a mortgage? Like
exactly.
My mortgage on my house, I got at 7.75 and 6.5, 4 and something. And now I'm at 2 3/4. I don't pay an extra penny to it, because I'd rather put it somewhere else where it's yielding me money.
Agreed. Yeah, I try to tell people that all the time. When I bought my first house, this was 23 years ago, of course, but the interest rates at that time was 6%. But I didn't fit the mold of a typical buyer. They gave me 8.75.
Ooh.
But I dealt with it because I got in. My goal was to get in.
Smart.
I got in, dealt with that interest rate for 6 months, and then I refied to 5.75.
That's awesome.
So I try to tell people that all the time. The same things that you're talking about is you have to try to find a way to get in. If you're looking to buy a house and the goal is to get into a home and to be a homeowner, find a way to get in.
Yeah.
Whatever rate that you have, whether you take a 40-year mortgage, you take a 50-year, you take a 60-year, whatever it may be, 9 times out of 10, you're never going to stay.
100 year.
Yeah, 100 year.
Nice.
You're never going to stay in that home for that period of time, number one. Number two, the rates are always going to fluctuate. So when you get in and you can afford it, once the rates dip, anything below what you're paying now, as far as the interest rate, is automatically going to be gravy.
It will, because if you think about it right now, interest rates and income and cycles for income generally, or I should go for the market, generally goes in 7 to 10 years, right?
Right.
So eventually the interest rates are going to go super high,
Right.
and then they're going to go really low,
Really low.
and then they're going to be in the middle. So there's going to be all of that up and down. And I remember when the rates a couple of years ago, year and a half ago, were 8.5. And I remember so many buyers got out of the market.
Yeah.
And I had so many home buying webinars. And I told all my buyers, now's the time.
Now's the time, right?
Because now all your competition is on the sideline. Now there's not so many offers. Now you'll be able to get your house at the lower price.
Right.
I have a client right now that I'm doing a refinance for that bought a house at that time. And I'm getting her down into the sixes. She's at 8.375 right now. She bought the house in the Bronx for $849,000. We're expecting appraisal.
Nice.
She bought it 2 years ago.
2 years ago.
No one competition. The seller needed to sell. She got a great deal. She didn't just pay market. She paid under market.
On the market.
The next home that sold in the area after hers went in the nines.
Nice. So back to the 50-year thing, mortgage. Do you think that's long-term impact on the mortgage world?
I think it's a long-term impact on the real estate world. I think it's going to bring up prices a little quicker because now there's more room for entry.
Okay.
And I think there's going to be more offers because at the end of the day, if this is the real estate that's the seller side that's you could purchase from right here, and let's just say right now it's here because it's bigger. The buyers are larger than the sellers, right? And now all of a sudden it goes from here to here. Now all of a sudden these sellers could demand more because of simple supply and demand. If there's less supply and there's more demand, they could ask for more because there is someone that will pay more.
Right.
So at the end of the day, now you're telling me I could save $400 a month. I would save happily $350 a month and give you an extra $10,000, $20,000 for that house. Because I want that house.
Yeah. And that's all that matters, right? At the end of the day, I try to tell people that all the time.
Yeah, because now they sold it and they got an extra $10,000, $15,000. Now their neighbor says, oh, he got $10,000, $15,000. Now they want to sell their house. Right. So that's how it works because people look at it. The homes are being listed how? They look at comparables. The last 3 homes in the area that are ranches that are similar to mine sold for $700,000. Okay, I'm going to ask for $710.
Right.
And that's how it goes. Then the next person's going to ask for $720.
Right.
That's why there's always another. Everyone says, one of my friends told me he bought a house and everyone laughed at him. And it was in this area, whatever the number was. And everyone says, you're an idiot. He goes, I'm the biggest idiot today. He goes, but tomorrow I'm the smartest guy.
You guys hear that?
And I don't like to use the word idiot, but it emphasizes what I'm saying.
You're driving home the point, yeah.
And I'll never forget, we were at his house, we're having drinks, and he goes, today, to you, I'm an idiot. Tomorrow, to you, I'm the smartest guy in this room.
I love it.
And you know what? He is the smartest guy in that room. I swear.
I love it.
He bought it for a great number.
Yeah?
Yep. He could trade it for whatever he wants.
I love it. Work-life balance, because you and I have both been in our industries for almost 25 years.
Yeah.
How do you balance mortgage work and personal life?
So I always say the only good thing that came out of COVID was Zoom. It helped me out so much with time because, as you know, I do a lot of events and a lot of speaking, a lot of educational.
Right.
And before, I used to go to a place, get there early, set up, make the place perfect, put everything out, speak, take everything down, and then drive home.
Right.
And I would get home before the kids were sleeping. Now, we're sleeping already. Now I do a Zoom from 6:15. I'm done at 7:45. I put the kids are finishing shower and I'm with them. So it's a beautiful thing where I could do that. Also, a cell phone is the biggest curse because you can call me on Saturday, Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, Monday, at any time of the day.
Right.
And my phone is on me. And with my anxiety, I answer it. But at the end of the day, it's also a blessing because I took my family to Europe a couple of months ago,
Yeah.
and you know what? I said it was a beautiful day because until 4 o'clock, where I was, it was everyone sleeping. Now at 4 o'clock, it's 9 a.m. in New York,
Correct.
and now I had my full day with my kids,
Nice.
and everyone knows Daddy's gonna go from 5 to 7, and I'm gonna work. Just give me my hour, 2 hours.
And I'll be back.
I'll be back. And then I have dinner, we do everything. And then I'm on the terrace generally, on the balcony where everyone's sleeping from like 11 till 1. And I'm finishing because that's where it's like 5 o'clock in the afternoon.
Oh, nice.
And then I finish everything. And then I wake up an hour earlier than everyone. And then I do everything from the night before and I space time. It's all about bracketing.
Nice.
Yeah, with my anxiety, I have to because I can't enjoy my vacation unless everything's taken care of.
Okay. You sound like a kind of control freak like myself.
I am.
Okay.
That's all.
Nice.
It's a blessing and a curse.
Yes.
It-
Yes, agreed. With the work-life balance, boundaries versus always being on call. How do you?
I'm always on call. It's crazy, but it's the truth. I don't know how to say it. I've been in St. Bart's, like I know it's our favorite place. I bring it up.
Yes.
And I am literally finishing my lunch, which is a nice party, a nice scene. And
you like to party.
I know how to party.
He knows how to party, folks.
I'm a guy that work hard, play hard, and still work harder while you're playing harder. That's all. And my friends laugh because they say the joke of all my friends is this is David, because that's all they hear. This is David, and be answering my phone saying this is David, and it's the truth. And they'll see me in the corner sitting there, and they're like, Dave, you're a few drinks in, and I'm like, I've been doing this since I was 17. I could do this 20.
With your eyes closed, bro.
Yeah, and I don't drink normally, so, but I still, my mind still works. It works. Okay. It works. I don't know how, but it works, and I get into mode, and I figure everything out. I do it. I've had some of the crazy complicated deals where I figured out while I was on vacation, literally walking up a mountain with my wife, and she was pissed at me, and I came back, and Sunday afternoon at 9 a.m., I was in the client's house picking up their documents,
Nice.
getting them out of their denial from a mortgage.
Nice.
Yeah.
Yeah, the St. Bart's thing, like you said, you know that I went there last year.
Yep,
My
I
50th. I remember my son calling me. There was a seller that we were trying to lock up a deal. We were trying to get them to list with us, and he had called me. I think he called me saying that she wanted to speak, and thinking that I'm away and I'm going to be completely disconnected. And this was during my 50th birthday. I still picked up the phone, called her, had a conversation with her. When I got back, we listed the house, and we ended up selling it for $111,000 more than she thought she was going to get for it.
Sick.
While the neighbor next door told her, who was a builder and investor, I'll give you $50,000 less than what you wanted to list it for, because nobody else is going to pay you anything more for that house. And I asked them to give us a shot. They did. And we did what we had to do.
That's why I always say who you work with really matters.
Every single time. I agree.
All the time.
I agree. Sneaker segment. So, are you a big sneakerhead?
Honestly, I like sneakers. I am not as stylish as you. Like, I don't know how to wear them like you.
Okay.
Like my wife was laughing when I put
When you put these on today?
when I put these on today.
You got the Jordan 2s, the mashups. Okay.
Yeah.
I like this, the black and blues.
I'll
Okay.
show them.
I like it.
So I had to rep the right way from
Nice.
with you.
Appreciate it.
But I would say is that it's a better, also it's so comfortable.
There you go.
I gotta say it's so comfortable. Maybe I'll keep them on all day, bro. My other shoes. I like shoes. I was just in Italy, and I bought and I was saying that, and the leather there is so cheap. I mean, I bought a new bag. I bought
better material too.
better material, and okay, it doesn't have the name on it, but it's the best of the best.
That's all that matters.
And I saw 3 brown shoes, and I was going back and forth. My wife said, you can't. There's no weight. You can't do it. And long story short, I took all 3 because
You did?
and my wife's like, you're not going to wear it. I said,
I respect it.
one time I'm going to wear but for the price, it was,
You had to take
3X.
Right.
For each one.
Right.
So it's like, and one of them would have been 4X. So I'm like, this is a no brainer.
Honey, I had to take it.
I had to. And then I had to do my thing where you say I could get around things when I was putting in my suitcases.
Right.
My first one was 50 pounds on the dot. My biggest one was 82 pounds. So I put the 50-pound one on, and when all of a sudden I had to put the 80, I'm like, I'm like trying to do it, but trying to smile at the woman so she doesn't expect.
Right.
And I put it on, and every time she was looking down to look at the weight, I'm like, so how's the weather in New York right now? So, I enjoy. Italy is beautiful here. I gotta say, Halloween's coming up. Are your kids doing it? And she just wouldn't stop. And then all of a sudden she started talking about her grandchildren, her kids, and this and that. And then all of a sudden she goes, enjoy your flight. Hit the button. I watched it go.
32 pounds over.
$225 saved.
I love it. I love it. We're always moving and shaking, folks. Doing what we need to do. There you go. So with sneakers, do you have a favorite pair?
Do I have? I like Common Projects. You could wear them with almost everything, and
You can dress them up and dress them down.
yeah. Then
I like
the OCs, was it the Federers?
Oh, the Federers. Okay.
I forgot those. And then you could always get, Nike's a staple. But
Nike
yeah,
is always a staple.
but Common for you, I usually wear it with my jeans and my jacket. You could dress them up, dress them down,
Right.
easy, and they're very nice and not too showy.
That's why I like the ones, the Jordan ones, that you can dress them up and dress them down. I usually have a suit on with them, and probably one of my favorite.
That if I can't do that, but when you do it, you look
You're really good, bro. You can pull it off.
Maybe
Hey,
in my
folks, he can pull it off.
Maybe I'm in my head, but I see you do it. I'm like, wow. Like,
So-
even your son is so cool. Like, I'm like, you guys could do it. I don't know.
Thank you. We try.
I gotta see. Maybe I'll
Thank you.
try it.
Thank you. What is the best mortgage advice for 2025 that you would give the world?
Give the world. Don't be afraid of it. Honestly, that's the number one thing. Is they're afraid. They're excited about you looking at a home with you. They're not excited to talk about me because I'm talking about the money, right? Don't be afraid of it. Honestly, the reason why I say that is because most people get so discouraged when they do it, but embrace it. It's fine. It's an investment. It's not an expense. Your car is an expense. Your house is an investment. And the cool thing about your house is eventually you'll have to make a decision, which is a great decision.
Right.
You're going to sell it, get a ton of money out of it. You could refinance it, get the money out of it. Or one day, God willing, you have children. And if you do, your kids will, there's nothing more important to me than giving your child a head start. And that, because if you give your child a head start with the roof over their head, they could take more risks and they could open up their own home, own businesses,
Right.
like you, their own practices. They could take risks because they have their roof taken care of at a lower price, and they don't have to spend $5,000, $6,000, $7,000 a month, whatever it's going to be rent at that time. And they will be able to have extra cash to do extra things with it. And God willing, they'll be able to make their children have a little bit easier time in their life, because in my opinion, life is only getting harder. And one thing is, we cannot create in this world. There's one thing you can't create in this world. You could create people, right? I have children all the time.
All the time.
You can't create land.
Right.
Land is going to stay the same size. So at the end of the day, one thing that's going to happen is more people are going to buy property and just sit on it instead of with the old conventional buy, sell,
Right.
because everyone understands what real estate is. It's worth more than gold.
You got to hold on to it. Yeah.
Correct.
Buy and hold.
And if you could, you could. And if you sell it, you should trade it. You should never sell it and not, unless you're at a very...
Pivot, level up, level down.
Yeah,
Yeah.
exactly. Something, because you got to invest into something. So in my opinion, the roof over your head is very important, but you'll have unbelievable choices what to do with it in the future, which will really help your children and create generational wealth.
I love it. Yeah. My, the first house that I bought, like I said, I bought it 23 years ago. We stayed in that home for 4 years. And it made it easy for us to be able to level up and be able to pivot. And I had some leverage from that first home to the second one that I bought, which we had for 18 years. And we sold it, I think, 3 years ago. Well, before we sold it, I bought another home, which we've been in now almost 3 years. But the place where I'm at now, I wouldn't have been able to get there without my starting point,
Yep.
without where I started from. So where I started from wasn't my end all be all for the home, but it made sense for me at the time, which is what I try to tell a lot of the buyers that I work with. Financially, if you're not in a position to be able to buy your dream home in the beginning, which a lot of people aren't.
Most people aren't.
Most people aren't.
Right.
Start from somewhere. When you start, it makes it easier. Whether you stay there, on average, a lot of the first-time home buyers, you'll normally stay in a home, they said 4 to 6 years, sometimes 5 to 7 years.
Yep.
It makes it easy now for you to be able to trade in that home, like David said, and now move into something bigger and just kind of go from there. And maybe level up again, and it makes it easy for you to be able to, either go up or down.
Yeah, and the reason why also is because it's like you freeze time. If you bought your house at 500 and now the house you want, let's just say in 3 years from now, is worth 1 million for argument's sake.
Right.
But now your house is worth 700. So now, but the house you wanted, back in, when you were buying it was 700 at the time. Now your house is worth 700. So now the spread is pretty much going to stay the difference. Is going to stay there. So you froze time. So basically the house, your dream house went up, but your house went
Your
up.
house also went up.
So wherever it goes, it's going to follow it. And then eventually, unless you get lucky where your area blossoms very quickly, because if the more expensive house doesn't go up as quickly as the home that's going up.
The medium ones.
Correct. So that's why we say when you're investing in real estate, one of the best things to do is affordability. Like, what was it? Hempstead, West Hempstead, one of those?
Hempstead.
I remember when I used to teach classes there because I think it's mostly rentals, and they were trying to promote home ownership. So they had me come speak to the town and all the renters there. And I remember a house back then were 370. Does that make sense? 270?
It makes sense. I bought one in, I think, 2019 in Hempstead. I paid $252,000.
Okay,
I bought
and
it,
this was
fixed it.
2015, 2017. So yeah, so then the houses were even and people like, I won't live there because there was a lot of issues there with crime and things like that. And now?
I just bought a house, I think the end of last year in Hempstead, and I sold it in July of this year for $780,000.
And everyone cleaned up, because at the end of the day, real estate works like this. If this area is very expensive, everyone is here,
right.
And then it's here, and then it's here. But over here, eventually this area is going to keep branching off and going and getting more and more expensive, which these homes are going to catch up to these homes because the community is going to get larger. So, it's like Bed-Stuy also. I remember Bed-Stuy over here, you could buy a house over here for 500,000. Over here was 1 million. It was literally 10, 15 blocks away. Then this house went up 600. This house went over here to 900. This 8,765, and then all of a sudden, boom, boom, boom. Now everything's the same price, and everything there is worth a ton of money, and it's beautiful because you're talking about brownstones, high ceilings, and fireplaces, and woodwork that you can't create anymore, and moldings and everything. Because I remember growing up there because a lot of my friends were from there.
Yeah, my dad owned a lot of brownstones back in the late 80s, early 90s. He was having so many problems with his tenants. He ended up giving a lot of those homes back to the banks.
Yeah, my grandma sold it for nothing. Nothing. And it's like she owns her home. She owns her home for $24,000. She bought that house for I think $18,000, $19,000. Wow. And now it's worth,
I could just imagine,
2-3 million. I don't know what it's worth. But the rental, the rent in those properties you're talking 10, 15,000 a month.
Right.
That's the moneymaker.
That's the moneymaker, folks. Definitely get in, buy, invest, and do what you need to do to set up that generational wealth. How do people reach you?
Sell, I always say, is the best way. You could text me, you can call me, 917-597-0870, David Mizrahi with Cliffco Mortgage Bankers. Or you could email me, which is dmizrahi@cliffcomortgage.com. But sell.
What about social media?
Social media, David Mizrahi, I think, is my, I'm bad with that. But, and then David_Miz. Someone just, David from that guy from yesterday.
Yes.
So I figured out what that was. So David_Miz is Instagram, and I think David Mizrahi, Facebook. You can't miss the dimples. You'll find me.
Yeah. Just Google him. You'll find him, folks. The guy's, he's out here. He's one of the coolest mortgage guys doing what he does. Like I said, one of the hardest deals that I had for this year. He's the one that was able to help me get it done. We closed, the family's in, they are so happy. They've been thanking us. And, this is what we do, folks. So if you're looking to sell, buy, or invest, 516-218-1605. Family agent on all social media platforms. Thank you very much, folks, for hanging out with us. Have a great day and stay blessed.